Oops.
Are you there, Fran? Did I lose Fran?
It looks like she got kicked off somehow.
Yeah, she might have accidentally. There was an option to continue or exit the meeting. She might have accidentally hit the exit by mistake there.
Okay, I'm letting her back in.
I'm sure she'd appreciate that.
Okay, let's do take two on that. That was me, sorry. I was just going to say that we ran and maybe some of you who are watching the Olympics here at home saw it. We had a nice spot featuring the treasure that had a little bit of a hint of an Olympic theme to it. And we're repurposing parts of that ad to adopt more of like a general sports theme. So it kind of fits going into, the fall athletic season. And along the same lines as sports, we are also 529 is a sponsor of Channel 7, which is the ABC affiliate here. Their Friday Night Lights, it's because we were talking about it. Friday night high school football segment called Save of the Week. So it's kind of a play on the idea of saving. And basically what they do is the TV station will kind of narrow it down to 3 plays that they consider to be, the saves of the week. And then they encourage people to come on to their website and vote. So it's for us, it's another opportunity for them to see our ad when they log in to vote for their favorite save of the week. So we get mentioned during the TV spot when they're setting it up, and then we get mentioned or see an ad for the people who log in to vote. And then finally, along the lines of TV, Vines, Brookshire is also in the development. I think they're kind of putting the finishing touches on a really nice 30-second spot that's fairly targeted to grandparents and new parents. So that will go into rotation here in a few weeks. So at our next board meeting, we'll be showing that spot to you all. Along the lines of general marketing and advertising, we continue to work with Vines and Brand Catalyst, formerly Northwest Arkansas Brands, on developing digital and social media ads that really encourage either current account owners to make a contribution to their existing account or encourage new accounts to be opened. So those are kind of the two focuses of both the digital and social media. Speaking of advertising and branding, if you may recall at our last board meeting that we had a discussion and came up with, we approved using the new name for the 529 plan as the Arkansas Brighter Future Plan. And we've been working with Dave and his team at Census on not only developing the logo, but kind of the whole rollout of introducing a new brand. So I'm going to toss it over to Dave and let him kind of bring everybody up to speed on where we are with that process.
Absolutely. And, it's been so long since I've used Zoom. I'm looking for the share screen. Oh, there it is right there, right in front of me. I want to share the logo. Is that okay if I share the logo?
Sure.
Okay, let's just see.
Isn't it?
If I can find it. Let's see. Hang on 1 second. Here we go. So this is what we're looking at right here. Of course, we're going to be naming the direct plan, Arkansas Brighter Future Direct, and the advisor plan will be the Brighter Future Advisor Plan. Can you guys see that okay?
Can you see it, Grant?
Any initial thoughts on this at all that you guys want to discuss before we talk about just where we are with the transition?
Well, and I want to just give a little bit of background. I mean, we went through a very, probably 3 or 4 different rounds of discussions with the census team on certain nuances that kind of gave a nod to Arkansas, and looked at different colors and different fonts. And so if any of you have ever been involved in that process, it's not somebody doodles something and boom, it's right there. So but there may still be some other tweaks. I'm not really sure, but we did want to go ahead and put it out there and get some feedback from everybody.
And Fran, you and Grant did such a great job. I mean, I know I contributed so much to the font, but it was really, that's a joke. I don't even know what a font is. But they did. There's a lot of conversations about this with our team, and I think the product looks fantastic. I just think it's a great result.
So I would just kind of pause and ask any of the board, any initial feedback, any thoughts, any more specifically, is there something you do not like that we need to go back and fix?
I have been involved in logo design processes, and they are quite extensive. And this one looks good. I don't have any negative comments at all.
That's awesome. Thank you. So let's talk about the timeline. So we're basically working on a relaunch of the advisor plan. We are building that from scratch, and then we're rebranding, basically redoing all the wireframes, and almost like a complete relaunch for the direct plan as well. So the objective that we have for bringing these live will be somewhere between December 15th and December 30th. We're going to be supplementing both of these plans. That supplement will be mailing in the October statements. They go out the first week of October. And that will be really the first notification to the audience, to everyone out there, all the account owners, that there's going to be a change in December. So it's a lot of conversations. In fact, there's an hour-long conversation right after this meeting with my tech team to kind of update where we are, and then we're going to be locking in that final date in December for when both of these plans will go live. Already started talking about the transition of all the selling agreements for the advisor plan. Thank you, John Park. So there's a lot of moving parts here, a lot of things going on, and we'll continue to keep you guys updated.
Dave, thank you very much. Fran, I think we're coming back to you.
Yeah, well, and I was going to use this as an opportunity when, Dave mentioned there are a lot of moving parts, and I'm going to, John Peace, toss it over to you and possibly TJ to talk about what we need to, as a board, look at going forward with any amendments to the rules and regulations, since we do have the new name.
Yeah, turn it over to the lawyers, Fran.
Thank you, Brian. Thank you, Fran. Yeah, I don't think we've amended our rules since about 2008. It still has reference to the Aspiring Scholars Matching Grant Program, which we no longer have, and of course the name change. So what I would suggest is that I do a red line amendment to the rule, send it to the Census Council, get their approval, and then present it to this committee in November when we meet for the fourth quarter. Then once it's approved by the committee, TJ will take it through the administrative process and get it approved by legislative council.
Yeah, I mean, is there any questions?
What kind of a timeline are we thinking?
November?
I mean, within the next 30 days, I can have a red line up to a census, and then we can vote on it at the November meeting, if that's okay with everyone.
Sounds good to me. Clint, anybody else have any input?
That sounds good to me.
Okay.
Okay, thanks.
Awesome. Then I just have 2 more things. One, in your packets, and you all, it was more just for reference and looking at later. The investment policy is also something that has not been updated in quite a while. And so I'm have asked Dave to kind of spearhead getting that updated, especially in light of the impending transition of iShares, under the census umbrella. So, Dave, do you want to give us kind of an update on, so lots of moving pieces here.
There are, and the investment policy, is somewhat outside of our normal scope of business. I don't think we've ever actually created an investment policy ourselves at a census, but we're in the process of taking some of the best practices of other investment policies that we see across the country with similar investment strategies. Now, of course, the investment policy is the single investment policy that will cover both plans. So, the plans are totally different when it comes to investment strategies, but that's what we'll be wanting. We'll straddling the two plans with the investment policy when it comes out. So I've got in my hands their first, the investment team on our side, the census investment team's first draft. We've had a conversation with our legal team to kind of amend the language so that it reflects Arkansas. I've got some edits to do, which I'll be returning that back over to the team this afternoon. And then my hope is that within the next week or so that we'll have you a draft review. I know, John, you'll want to take a look at that. Well, I know John Parker will want to take a look at it. I know Vanguard will want to take a look at it. And John Peace, I know, obviously, you will have the review as well. So I'll keep you updated, Fran, on how that goes. But again, I'm hoping to have the draft out to the partners next week and then to the state shortly thereafter.
Awesome. Does anybody have any questions for Dave about that? And then the last thing I had under the director's report was just letting everybody know that, what is today? So in September, we will be doing our annual review with Morningstar. So we're in the process right now of trying to lock in when that meeting will be, when that review will be with their folks. So last year we inched up just a little bit from negative to neutral. So Treasurer, in the spirit of your Olympic ad, I'm gonna say we're going for the gold this time. So we'll see. We'll see. Got to dream big, right? Got to dream big. So. All right, well, that concludes the director's report. Any questions?
I don't.
Okay. And then just moving on down the agenda here is next for approval, checks and invoices. You all should have a copy of that in your packets. So I'll put that out for approval.
All right. I move we approve the checks and invoices report as presented.
Any seconds?
I'll second it. Yeah.
All right. All right, great, thank you. I'm going to ask Grant, you all should have received a copy of the budget, and I think Chris, you will.
I think for the minutes, I need to go back and get approval on those motion, on the motion so.
Oh, okay, sorry.
Yeah, all those in favor say aye. Aye.
Aye.
Yeah, so we have that approved. Sorry, I was sitting there yakking and I had it on mute, so my bad. Go ahead, I'm sorry.
No. I was just going to ask if Grant, I believe he's in your office, their treasurer, if he would take over presenting the budget that we're submitting for approval to the committee today.
Yes, Grant.
So what we've done this year, and we'll kind of get into further discussion on specific line items later in the meeting, but you were sent out a proposed budget prior to this meeting. You will see that in the expenses, everything was baseline except for, obviously we're doing travel. Travel is starting to open up with some of the conferences and stuff, so we had to get that money put back to where it was pre-COVID. We were able to, with the extension of the Invite Education contract, we received some savings from that. You will see that the mobile app, the quarterly maintenance, that number has been zeroed out. And we'll get into that conversation here in a minute. We did go ahead and do the insurance for the year. There was a substantial increase on that. So that's where you'll see the increase that came from there. We have adjusted the income based on the most recent quarter and projected that out over the next year. So what we are proposing at this point is a budget surplus of $136,000 approximately, and for FY22. So as you've got all those numbers in front of you, I'd be glad to answer any specific questions that you have.
Any questions?
I don't have any.
Motion.
Hearing none, could I get a motion to approve?
I move we approve the proposed budget for fiscal year 22.
I have a motion to approve. Do I have a second? I'll second it. And any further discussion? All those in favor say aye.
Aye.
Motion carries. Thank you so much. And Grant, are you picking up?
Yes, I have one more item. In your packet as well, you should have received a list showing the maximum contribution amounts allowed by state. When the 529 plan here was launched in 2005, we set 366,000 was established as the maximum level contribution. And in today's world, that equals a little over 500,000. So this actually came out of a conversation that we were having with Dave about some of the other states that were choosing to increase their maximum contribution. And I just wanted to kind of open it up for discussion. And there are two pages, one's by amount and one is by state. So depending on what you were more interested in looking at. But just wanted to put it out there for conversation if we would consider, and John, correct me, we don't need any, this is nothing that would need to go before the legislators. This is all programmatic, correct?
Right, that's right, yes.
So
Okay.
your thoughts?
So yeah, for my ignorance, could you expand upon what the actual maximum, it's like per family, per year, per time frame, whatever, what does the maximum mean in layman's terms?
And I can weigh in here, Fran. It means maximum per account per beneficiary. So, I mean, it's certainly a beneficiary that has multiple accounts who various account owners can have more money than the max saved on their behalf. But for an account owner binning combination, so that one account owner, that one binning, for that one account, once you exceed the maximum contribution, whether that's driven by your contributions or whether it's driven by market growth, once it exceeds the 366,000, you can no longer make deposits into that account. Okay. So that's pretty important. And that inflation comment, Fran, right, was right on. That's perfect. And just to give you an idea, even Louisiana has a 500,000. That sounds terrible, right? I shouldn't say it that way. Louisiana has. I apologize. Louisiana has a $500,000 maximum.
Don't apologize, but go ahead.
But so just to give you an idea, I think it's probably long overdue that we raise the max. Now that does apply to both plans, and particularly for iShares, because so many of the iShares savers are on the West Coast and East Coast. I think it certainly makes sense that we get in alignment there.
Clint, you good?
Right. Very good. That more than answered it. Thank you.
Any further discussion? Seeing none, I'd like to get a motion to approve.
I'll make that motion.
Restate it, Grant.
Yeah, we'll need to hear what amount you all are comfortable with going to. I think the recommendation that staff has is 500,000.
Okay. I'll make the motion that we set the maximum contribution at 500,000.
I have a motion to set the maximum contribution to 500,000. I'll second that motion. Any further discussion? Seeing none, all those in favor say aye. Aye. Motion
Aye.
carries. And looks like we're moving on back to you, John Peace.
Yes, this is the year-end budget report for the fiscal year ended June 30, 2021. The expenses were right in line with budget. The income exceeded our budget by $88,000 because of the good market. We had budgeted to have expenses exceeding income by $67,000, and we actually had revenue exceeding expenses by $28,000. So it was a good year for the admin account.
Excellent.
And at June 30th, the total of the two bank accounts was $178,000.
Okay, John. Moving on back to you, Dave Ponder.
Absolutely. Let me share
Actually,
my screen again.
let me rephrase. I get along certainly with my colleague in Louisiana. I always get to thinking about LSU. And so when I think of Louisiana, I think of LSU, and of course, but anyway, I just wanted to clarify that for the
Completely understand. That sounded terrible the way I said it, though. Sorry about that. But yeah, LSU, those LSU Tigers are enough to get everybody hating LSU, Louisiana. Too many national championships. They're getting about as bad as Alabama. So I just went ahead and started this off. Can you guys see the slide?
Yes.
So these are end of July numbers. The gift plan is now up to over 578 million. I did want to point out that when you add that, and you'll see the iShares numbers later. The trust is almost 1.25 billion. So you're already on your way toward the second billion. So congratulations on that. But this is a nice steady track on the increases. A lot of that's market driven, of course, but your inflows are tremendous as well. So that's good. So your 21 contributions are 34.5 million. That's 17% over 2020. In fact, if you look at every one of these months, I think except for March, every one of the months, 2021 has exceeded 2020. So the year is starting very well for you guys. And then withdrawals, we're at 24.1 million. That is over the 20.88 million that we saw last year. The good news is that we're looking at 87% of those being qualified withdrawals. So they're just being used for the purpose that it was meant for. Any questions there?
No.
So net inflows, when you do the math, comes out to 10.45 million year to date. That's a 21% increase over 2020. So again, your growth is driven by both market and net inflows. Funded accounts are now at over 32,300. Congratulations on that. Funded account size continues to grow here. This is nice and steady at closing in on $18,000. But when you look at the average per Benny age, you can see that you're well over almost $25,000 for those that are entering college. And then real quickly on iShares, iShares is over 668 million as of the end of July. 15,363 funded accounts with an average funded account size of almost 43,500. And then lastly, the UGIFT and UPromise side. On the UGIFT side, the gift plan has crossed 8.6 million in contributions by friends and family. iShares has crossed 3 million. The number of gifts for the gift plan is almost 15,000. The number of gifts for iShares is almost 2,700. The average gift for the gift plan is 578. The average gift amount for the iShares plan is 1,137. So those are good friends to have right there. UPromise Rewards total sweep since inception, we're almost at $2 million in UPromise Reward sweeps. So you're going to continue to see some increased relationships with the new UPromise that has kind of revamped itself over the last year. There'll be a lot more opportunities to do some emails to those UPromise members living within the state of Arkansas, Fran. So you'll hear more about that in the months and months to come. Any questions on this report? Very good, thank you.
Dave, thanks so much. And again, I give all the credit to a great, solid team. Ever since my time as being the treasurer, it's just been so uplifting to see the work that's being done for Arkansas. And more than anything, I compliment the citizens of Arkansas for for listening to what we are talking about. And of course, actions speak louder than words, and we all know that. So, as the man said, it ain't bragging if it's fact. And right now, that's where we're at. So how about John Park?
Hi, everyone. Thanks for having me again. I'm going to share my screen so that we can see the deck. Let's see. There we go. All right. Okay, so skipping ahead to next slide. We'll start off with the planned growth. Numbers through the end of July, as Dave said, we are now sitting at 668 million. So that's already been a 13% increase since the year end of 2020. So just to speak broadly about what we're seeing for the plan and really for the industry is that obviously it's been a tough year and a half or so, going on 2 years because of the COVID lockdown. But from a savings perspective, the market has been pretty kind, as everybody knows. It's been very resilient, and Americans have been saving. So what we've seen across the board, not only in this plan, but the 529 industry, and then just the investment savings industry more broadly, is that Americans, up and down the economic ladder, have had some disposable income to pad their savings. And that has certainly been true for the 529 industry in general, right? So we have seen assets continue to rise. We're obviously happy about that. And a similar trend exists in the state of Arkansas as well. So if you look at the numbers, we're at an all-time high in the state of Arkansas at 66 million. That's actually up higher on a percentage basis than the plan. So it's up 19%. We actually had a few firms jump on from a distribution perspective with selling agreements. So our firms have bumped up a little bit. And, that number is always in flux because there's also been a lot of M&A activity within the broker-dealer community and the RIA community as well. So those numbers do change quite often. But better news is that financial advisors continue to sign on for the plan. We had an 8% increase in financial advisors just within the state of Arkansas. Again, similar rise in the accounts as well. And as Dave mentioned, the average account size is growing. The bigger firms continue to add advisors. Equitable has now 11 advisors. In fact, I believe that they're responsible for the single largest relationship. They have a financial advisor with, I believe, over 5.5 million in advisor sold assets just within the state of Arkansas. And that's substantially bigger than pretty much any other financial advisor. So you see 166 Edward Jones advisors. So that's exciting as well. Edward Jones obviously is one of the fastest growing firms out there in the broker-dealer community. So overall, in terms of the numbers, we're pretty happy as far as what's been going on in Arkansas. There are a lot of trends that are working in our favor. Obviously, there's been a lot of flows to passive investing in the investment markets just in general, as people, look at low fees. They want to be in index-based investments, and obviously the indices themselves have just been tracking upward for pretty much unabated for almost 11 or 12 years now, since the last Great Recession. So, all of that is encouraging. Obviously, a lot of unknowns in the world. And I know that Vanguard, does a good job of recapping kind of what's happening in the market. So I'll just leave it at that. But overall, we're happy with the way that the plan is progressing, and, good news overall. And that's about it for me.
John, thank you very much. Any questions from anyone? Okay, moving on, we're going to have Julia.
Good morning, everyone.
Good morning.
Good morning, Treasurer, members, and staff. Thanks for including me this morning. I'm going to try to share my screen. Can you see my screen?
No.
Okay. Can you see it now?
I think you shared the Zoom. There you go.
There you go.
Okay, great. Sorry about that. Thank you very much. So just two topics that I want to share with you this morning briefly. First, I want to give you a very high-level overview of a new investment option that we introduced last year in 2020 and are offering to our state clients, our target enrollment portfolios. And then secondly, I'll just speak very briefly to your portfolio performance for the second quarter of 21. So first of all, as you know, you currently offer your clients Vanguard's age-based portfolios. These are multi-asset single portfolio solutions for account owners. You offer 3 risk-based tracks based on the amount of equity that's in those portfolios at the initial entry points. So aggressive has 100% equity, moderate has less, and then of course conservative has less equity than that. So these are the choices you offer your account owners presently. And your account owners need to, first of all, identify the age of their beneficiary and then decide what their risk preference or risk profile is. Are they a conservative investor? Are they moderate, aggressive? How much equity do they want exposure to? How is the target enrollment portfolio different than that? How is our new offering different? First of all, it's a single glide path, a single portfolio, a single decision for the account owner. Is there a benefit to this? We feel that the benefit is that it's an easier to understand, a simpler and more transparent experience for the account owner. They need only identify the age of the beneficiary and then select the portfolio that's aligned with the age of that beneficiary. They don't have to decide what their risk appetite is, whether they're conservative or moderate. It's a much simpler, easier to understand account experience for them. What are some of the other differences that are important to point out? If you look at the slide I have up, this is a visual representation of all the glide paths, the 3 age-based glide paths, as well as the new target enrollment portfolio glide path. As you'll see, the age-based portfolios are the dashed lines with a sort of squared off stepped formation. The target enrollment portfolio glide path is a smooth, progressive, curved line. So this demonstrates to you how the asset allocations are adjusted automatically in the age-based portfolios. They are adjusted periodically at a fairly static 12.5% rate. And that gives them that sort of stepped, squared off formation. How is the target enrollment portfolio different? This is a smooth, progressive, curved line, which means that the target enrollment portfolio asset allocations are adjusted much more frequently. They're adjusted every quarter, and they're adjusted to a much lesser degree. So what we've achieved here is we've been able to mitigate the market impact. There's friction in the market as we trade to reduce these asset allocations. So we've been able to mitigate the market impact to the glide path and hence to the portfolio performance. What are some of the other significant differences? You'll see that the target enrollment portfolio glide path falls directly in between the moderate and aggressive age-based glide path. Why is that? We've been able, through enhancements to our methodology and improvements to our glide path modeling, further optimize the risk return profile of the glide path. Now, what does that mean? If we go to this slide, we'll give you a visual representation of what this means. On the left-hand side is a visual representation of wealth accumulations at enrollment for both the moderate, target enrollment, and aggressive portfolios. And on the right-hand side is a visual representation of the probability of a major negative impact to the portfolios. Now, as you know, in your constituency, the preponderance of your investors are in moderate and aggressive portfolios. 56% are in aggressive, 27% are in moderate. So almost 85% of your constituents are in those 2 age-based portfolios. So that's why we're only looking at those. A much smaller percentage are in conservative. So if you look at the wealth accumulations at enrollment at age 18, with the target enrollment portfolio, we've been able to increase those wealth accumulations for a larger percentage of constituents. It falls in between the moderate and aggressive. However, if you look at the right hand of the slide, you'll see that with respect to probability of a major negative market impact, again, the target enrollment portfolio falls squarely in between the moderate and aggressive, but it's actually closer to moderate. So we've been able to increase wealth accumulation for a larger percentage of constituents, while at the same time reducing the probability of a major negative market impact. So that's what we mean by optimizing the risk return profile of the glide path. And that's why the target enrollment glide path you'll see falls where it does in between the moderate and aggressive, and why we've selected that specific asset allocation for the target enrollment portfolio glide path. There are a few other minor differences. I don't want to go into too much detail because I do want to be mindful of time for you all. But we do sort of start to draw down the equity allocation earlier in the target enrollment portfolio at year 3 as opposed to year 5. And we do end up with more equity at enrollment and then further down at commencement as well, more equity. So these are some of the major differences between your current offering of age-based portfolios versus the new option, the target enrollment portfolios. Do you have any questions? I know that's a lot to pack into a few minutes of conversation, but I just wanted to highlight the major differences between these two savings investment vehicles. Do you have any questions? No questions?
So Julia, real quick, I just would like to have the board really kind of review it, and let's circle back maybe in November and have a discussion about where we want to go with this. It's something we would like to start adjusting and moving the plan.
Yeah, so we'd be happy to take questions or prepare for another conversation with the board in November, Grant, whatever you like. We can certainly go into more detail, or you and Fran can solicit questions and get them to me, and we'd be happy to answer those more detailed questions the next time we meet. But just in general, we feel that this is, first of all, a much simpler, better account owner experience, and will remove possible roadblocks with respect to them deciding, am I moderate, am I conservative? And then secondly, from an investment perspective, we have operationally improved the methodology of the glide path and certainly enhanced the wealth outcomes and risk mitigation for the glide path as well. So I'd be happy to take questions later, or as I said, prepare for another conversation with the board and treasurer at that time.
Well, Julia, thank you very much. And I think what we'll do is tweak it like Grant said, and then try to come up with November. Grant, is that correct? And then if there are any questions from the board, speak now. See,
all right.
Well, we thank you, Julia, so much for your report. Grant, you got a mobile app update?
Yeah, Julia, was there anything on the performance of
Yeah, no, I just wanted to point out that as we discussed last quarter, these portfolios have continued to revert to more normal performance differentials with their composite benchmarks. As you know, we discussed the impacts of 2020 and historic volatility. The portfolios are now tracking their composites much more tightly and really are performing as we would expect. Underlying index funds, of course, are tracking very tightly. So no anomalies or exceptions to point out with respect to second quarter performance. And that's all I really wanted to share with you today.
Julia, I'm sorry for cutting you off on that.
No, that's all right, Treasurer. Thank you.
Now you're ready.
Yeah, so to give everyone an update, earlier this year, a census rolled out their plan-wide mobile app. And we've had, Dave can get exact numbers, but we've had a very positive uptake here in Arkansas for their app. And it begged the question, and over the last 45 days or so, I've done some deep diving into the performance of the app that we created, state specific. And really the momentum is more on the census side than our individual one. Also, as you could kind of see with the budget, the expenses that come with the insurance and those kind of things are obviously, with all the latest cyber activity and cyber threats, are becoming much more expensive for us to carry singularly as a plan. So what I did was ask John Peace to review all of the agreements, statements of work, contracts that we have with Central 25, who is our app developer, and really kind of present some options to us as staff that we could take to the board for your consideration. At this point, I would say the app has been widely successful. We were an industry mover, and we have really kind of paved the way with that development. However, However, we are at a point that for us to operate one individually is no longer makes economic sense. And I know all decisions shouldn't be made solely on that. But with this particular thing, we're either getting to the point that we need to invest a lot more on the development end, or we need to really kind of get on board and full force behind the census app. So what I would say at this point is my recommendation would be to work our way out of the Central 25 contract and focus on developing and being at the forefront of the development and further work with the census app. I do know that that's easier said than done. So I'll let John Peace kind of weigh in here on any kind of legal or contractual considerations that you all need to be aware of before making a final decision.
Yeah, thanks. Thanks, Grant. You know, I have reviewed all the contracts. So we've been through version 1, version 2. We had specific dollar amounts allocated to those. We're kind of in a maintenance function now. We just pay for monthly maintenance. No real upgrades going on. I think Central 25. It's a good app, but Central 25 did not do some of the things that they contracted to do, like being able to make contributions to the set it and I forget what it's called, but just to have a regular monthly contribution through the app. You have to do that through the census website. So I mean, I think we need to try to negotiate our way out of the contract, and I'll be happy to work with Grant doing that.
Any questions from the board, Grant? Any further comment?
No, I'd be glad to answer any questions from anybody on the board.
Seeing no questions, I would like to get a motion from the board to, how would I word that, Grant?
I think at this point, it would be fair to have a motion to allow staff to unwind the relationship and agreements with Central 25.
If you heard that.
I'll make that motion.
So I have a motion. Do I hear a second? And I'll second that. Do we have any further discussion or questions? Hearing none. All those in favor say aye. Aye. Motion carries. So thank you very much, John. Grant, do you have anything else?
No, sir. Just any new business.
Yes. Do we have any new business to come before this board?
The only thing I was going to ask is if we would look at our calendars and consider the next meeting being Tuesday, November 16th. And we can follow up with folks, but I think that's what we were looking at.
Okay, Grant.
That's fine with me at this point.
Okay. Grant, I think we're fine on that.
Yep. We'll send an email out to everybody, just a heads up.
Well, I tell you what, in closing, it's always great to be a part of good news and to see that there's no saying hard work still works. And I think, again, we've proven this, and I mentioned earlier. So I thank each and every one of you of the board, certainly, but the whole team. And the only thing I can say is go Razorbacks. So hearing none, do I have a motion to adjourn?
I move we adjourn.
I have a motion to adjourn. All those in favor stand up. Thank y'all so much. We'll see.
Thank you. See you, everyone.
Thank you. Bye-bye.
Thanks, everyone.
Bye.